Hello students, in present video I am going to explain about sixth problem from company accounts topic. I am taking this problem from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Previous problems videos links are available in the description box. Let us see the question first. Sixth problem. Ever Shining Company Limited invite applications for 20,000 shares of 100 rupees each at a premium of 10 rupees per share. The shares were payable as follows. On application, 20 rupees. On allotment, 40 rupees including premium. On first call, 30 rupees. On final call, 20 rupees. The public applied for 40,000 shares. Allotment made were as follows. To the applicants of 16,000 shares, full. To the applicants of 16,000 shares, 4,000 shares. To the applicants of 8,000 shares, nil. The company was authorized to remain all sums overpaid for adjustment against money due on allotment and on calls. The company exercised this power. The directors made the allotment on 1st April 2005 and first call on 1st July 2005. By the end of 2005, no further call had been made. All the money due on allotment were collected and against first call, directors had received 5 lakh rupees. Give journal entries and the balance sheet of the company on 31st December 2025, assuming that the directors had paid interest due to shareholders in cash at the rate of 6% per annum. This is a problem. Let us see the solution for this. Let us understand the question first. There is one public limited company, Ever Shining Company Limited. In question, their authorized capital is not given. Issued capital is given. Company issued 20,000 shares at the rate of 100 rupees each. So, 20,000 into 100, 20 lakh is called issued capital. And one share face value is 100 rupees. And how company wants to collect this 100 rupees? In 4 installments. Application money, allotment money, first call, final call. Application money is 20 rupees per share. Allotment money 40 rupees per share. In this 40 rupee, 10 rupees premium. Means allotment money is 40 rupees minus 10 rupees, 30 rupees. About premium, in previous problem, fifth problem, in detail I have explained. Fifth problem video link is available in the description box. First call money 30 rupees per share. Final call money 20 rupees per share. Issue price is, if you add all these 4 amounts, 110 is coming. Face value is 100 rupees. So issue price is more than face value. 110 rupees minus 100 rupee. 10 rupee is what? Premium. And company issued 20,000 shares now. Public applied for 16,000 plus 16,000 plus 8,000, 40,000 shares. So there is oversubscription. Demand is for 40,000 shares, but supply is only for 20,000 shares. And how company allotted the shares to them? To some applicants who have applied for 16,000 shares, company allotted fully. Some applicants who applied for 16,000 shares, company allotted only 4,000 shares to them. Some applicants who have applied for 8,000 shares, company rejected to allot the shares. No allotment to them. So, you can divide these applicants in 3 categories. Applicants who applied for 16,000 and got full allotment. Applicants who applied for 16,000 shares and got 4,000 shares allotment. Applicants who applied for 8,000 shares and didn't get any allotment. So subscribed capital is how much? Don't think that 40,000 shares into 100 rupee, 40 lakh. So while calculating subscribed capital amount, we should not consider the number of shares applied. We should consider number of the shares allotted by the company. They are applying for 40,000 shares, but with company only 20,000 shares are there, no? So company can allot only 20,000 shares to them. To first applicants, 16,000 company allotted. To second applicants, 4,000 shares company allotted. 16,000 plus 4,000. Finally, 20,000 shares only company allotted now. Therefore, subscribed capital is 20,000 shares at the rate of 100 rupees each, 20 lakh. So, issued capital, subscribed capital, both are same. Called up capital. In current year, up to first call only company made. Final call money, 20 rupee, company is going to collect in next year. Therefore, called up capital is not 100 rupees, 80 rupees only. From 100 rupee, we have to exclude this 20 rupees. And here you observe one point. While writing subscribed capital amount, called up capital amount, I am considering only face value of the share. See, subscribed capital. Issue price is 110 rupees no? But while calculating subscribed capital, we should not take 110. So that a 10 rupee premium separately we have to show. These are capital amounts now. While writing capital amounts, premium money we should not include. That is why here also 100 minus 20, 80 only I took. It is not a 110 rupee minus 20, 90 rupee no. So here also premium money I am not considering. Called up capital is how much? 20,000 shares at the rate of 80 rupees each, 16 lakh rupees. Next to come to paid up capital. So called up capital is 16 lakh and there are calls in arrears, 20,000. 20,000 is not given in the question directly. We have to calculate. Then 16 lakh minus 20,000, paid up capital is 15 lakh 80,000. So this 20,000 calculation here I have written. Amount received on application. Public applied for 40,000 shares no? On one share, application money is 20 rupees. So how much money they paid? 40,000 shares into 20 rupees each, 8 lakh rupees they paid. And to third category applicants, company returned this application money. That we have to subtract. Minus amount returned. 8,000 shares at the rate of 20 rupees each, company returned 1,60,000 rupees to them. Then remaining amount 6,40,000. Actually, how much money should come towards application? Company allotted finally 20,000 shares now. So on 20,000 shares at the rate of 20 rupees each, 4 lakh only should come. 4 lakh should come, but 6,40,000 came. So with application amount, how much extra money came? 2,40,000. Excess application money 2,40,000. So who paid this extra? Second category applicants. They paid application money on 16,000 shares no? But company allotted only 4,000 shares to them. On 12,000 shares, they paid extra application money. 12,000 shares at the rate of 20 rupees each, they paid 2,40,000 rupees. Now, this excess amount, instead of returning to them, company wants to utilize for further installments. So, this second category applicants have to pay remaining installments, no? Allotment money, first call money in next year, final call money. This excess amount, company wants to utilize for these installments. First, company utilizes that amount for adjusting allotment money now. On 4,000 shares, because company allotted only 4,000 shares to them, on 4,000 shares, how much allotment money this second category applicant should pay? On one share, allotment money is 40 rupees, including premium. So, 4,000 shares into 40 rupees each, 1,60,000 they have to pay for allotment. So, excess amount is with us now, 2,40,000. From that application money, 1,60,000 is adjusted for allotment amount. Then the remaining amount in application account is 80,000 rupees. So company transferred this 80,000 rupees to one account known as calls in advance account. Thus, share application account is closed. You can see this information in the form of account also. First, what happened? Company received 8 lakh rupees application money. So 8 lakh is credited in application account. To third applicants, company returned 1,60,000. That amount is debited. Actually, company should collect 4 lakh towards application no, That amount is transferred to share capital account. So 8 lakh minus 1 lakh 60,000 minus 4 lakh, 2 lakh 40,000. So for allotment from this 2 lakh 40,000, company adjusted 1 lakh 60,000. So 1 lakh 60,000 will be debited in application account. Now the remaining balance is 80,000. That amount is transferred to calls in advance account. Thus, share application account is closed. Now that extra money 80,000 is in which account? Calls in advance account. Now come to first call related information. Amount to be received on first call. Finally, company allotted 20,000 shares, no? 16,000 plus 4,000 on 20,000 shares at the rate of 30 rupees each. How much money should come? 6 lakh rupee first call money should come. And in question he is giving that 5 lakh rupees came. So in this 5 lakh rupee, how much is paid by first category applicants? How much is by second category applicants? There is no clear information in the question. So more how much should come? 1 lakh rupee. To adjust this first call money, we have a credit balance in calls in advance account, no? 80,000. That amount we can adjust for this 1 lakh. So fully we cannot adjust. 1 lakh should come for first call, but in calls in advance account only 80,000 credit balance is there. So 80,000 we can adjust. If you adjust that 80,000, then the remaining amount 20,000 we cannot adjust. Therefore, this 20,000 is known as calls in arrears. And this calls in arrears information also I have shown here in the form of account C. So from application account, 80,000 is transferred to calls in advance account. So there is a credit balance of 80,000 in calls in advance account. That amount is transferred to share first call account. 80,000 is debited in calls in advance account. Thus, calls in advance account is also closed finally. So this is the meaning of present problem. He is asking us to write journal entries for these transactions, and he is asking us to show the balance sheet also. Let us see the journal entries first. First entry is for receiving application money. Public applied for 40,000 shares. No? On one share, application money is 20 rupees. So from public, money is coming to company's bank account. Two accounts are there here. Bank account, applicant's accounts. Both are personal accounts. Personal account rule, debit the receiver, credit the giver. Bank is receiver, applicants are givers. Bank account should be debited, applicant's account should be credited. So first entry is bank account data. Two. Actually, applicants' names we have to credit. Applicants' names we cannot write now. So instead of that, a separate account known as share application account we credit. Amount 40,000 into 20 rupees per share, 8 lakh rupees. Share application account is created now. In another manner also I will explain why it is created. For that, remember this rule. Debtor is an asset, asset shows a debit balance. Creditor is a liability, liability shows a credit balance. Shareholders are paying application money to us. In future, company should return this money to them. No? To company, they are creditors. Creditor is a liability, liability shows a credit balance. That is why share application account is created. This is journal. Serial number, particulars, debit, credit. First entry, bank account data to share application account. Amount 8 lakh, 8 lakh. Narration, on 40,000 shares at the rate of 20 rupees each, application money is coming now. Write that as a narration. Being application money on 40,000 shares at 20 rupees per share received. Next entry is for returning this third applicant's amount. On 8,000 shares at the rate of 20 rupees each, they paid 1,60,000 rupees to company. So company is returning that amount to them because there is no allotment to them. For returning the application money, entry. So from bank, money is going to them. So bank account is a personal account, debit the receiver, credit the giver is the principal. Here, banker is a giver. Therefore, we should credit bank account. Company is paying 1,60,000 rupees to them. Now, we are paying money to them now. Therefore, applicants are not creditors to us. In first entry, by crediting, we have written that they are creditors to us. Now, as we are paying money to them, they are not creditors. So this creditor we have to cancel. By crediting, we have created creditors account. If you want to cancel, you have to debit. Therefore, share application account we have to debit. Amount 1,60,000. Second entry, share application account at to bank account 1,60,000 rupees. Narration: on 8,000 shares at the rate of 20 rupees each, company is returning application money. No, mention that as a narration. Being application money is refunded on 8,000 shares at 20 rupees per share. Third entry is for transferring share application account amount to share capital account. See, finally company wants to collect share capital money from the applicants. No? So in the form of application, allotment, first call, final call, company is collecting. So all these installments amounts we should transfer to share capital only. So share capital is also a liability because from applicants we are receiving that amount. In future, company should return to applicants. To the company, applicants are creditors. Creditor is a liability. Therefore, share capital account should be credited. With how much amount? Finally, company allotted 16,000 plus 4,000, 20,000 shares. On 20,000 shares only, at the rate of 20 rupees each, application money should come. So 20,000 shares into 20 rupees each, 4 lakh rupee. That 4 lakh only, finally we should transfer to share capital account. Therefore, for share capital account, write down 4 lakh rupees. And when we transfer application money to share capital account, now this application account we have to close now. By crediting, we have opened this. If you want to close, you have to debit. Therefore, share application account we have to debit with 4 lakh rupees. Third entry, share application account data to share capital account 4 lakh rupees. Narration: on 20,000 shares at the rate of 20 rupees each, application money came. That amount we are transferring to capital account now. Mention that as a narration. Being share application money on 20,000 shares at 20 rupees per share is transferred to share capital account. With this, application related entries are completed. Next come to allotment entries. In case of application, first we wrote amount received entries. Then we wrote capital transfer entry. But for allotment, first call, final call, first we should write capital transfer entry, then we should write amount received entry. So allotment account we have to transfer to share capital. So share capital is a liability. Liability shows a credit balance. Therefore, share capital account should be credited to share capital account. From applicants, how much allotment money should come? Company allotted 20,000 shares. On one share, including premium, 40 rupees should come. So 20,000 shares into 40 rupees each, 8 lakh rupees should come. For the 8 lakh rupee, applicants are debtors because they have to pay to us. Debtor is an asset. Asset shows a debit balance. Therefore, applicants' names we have to debit. Instead of writing their names, we write share allotment account. Applicants have to pay 8 lakh rupees. Total 8 lakh we should not transfer to share capital because premium is also included here. No, to share capital, actual allotment money only we should transfer. Premium amount separately we have to show. Actual allotment money is in 40 rupees, 10 rupees premium. Then 40 minus 10, 30 rupees is the actual allotment money on one share. On 20,000 shares, 20,000 into 30 rupees each, 6 lakh rupees. Then premium is how much? On one share, 10 rupees into 20,000 shares, 2 lakh rupees. That 2 lakh we should transfer to share premium account. Why share premium account is created? Share premium is a gain to the company. Expenses, losses, incomes, gains come under nominal account. Nominal account rule: debit all expenses and losses, credit all incomes and gains. Share premium is a gain, no? That is why it is created. Fourth entry, share allotment account debtor to share capital account to share premium account. share capital 6 lakh, share premium 2 lakh, share allotment account amount 8 lakh rupees. Narration, what happens here? On 20,000 shares at the rate of 30 rupees each, allotment money should come. That amount we are transferring to share capital. On 20,000 shares at the rate of 10 rupees each, premium amount is coming. That amount 2 lakh we are transferring to share premium. Mention that as a narration. Being share allotment money on 20,000 shares at 30 rupees per share is transferred to share capital account, and premium money on 20,000 shares at 10 rupees per share is transferred to share premium account. Next entry is for receiving allotment money. See, two categories of shareholders are there now. First category applicants, on 16,000 shares they have to pay allotment money. For that one entry we write. Second category applicants, on 4,000 shares they have to pay allotment money. But while paying application money they paid excess, no? That excess amount we adjust for allotment. So first 4,000 related applicants allotment money entry we write. Then first category applicants allotment received entry will write. On 4,000 shares at the rate of 40 rupees each, 1,60,000 allotment money they should pay. In application account now how much excess amount is available? See these entries. First entry, share application account is created with 8 lakh. Second entry, share application account is debited with 1,60,000. In third entry, share application account is debited with 4 lakh. Till here if you observe, 8 lakh rupee minus 5,60,000 is equal to 2,40,000. So in share application account, excess amount available is 2,40,000 rupees. And they have to pay 1,60,000 allotment money, no? So from this 2,40,000, that allotment money 1,60,000 we can adjust. So from 2,40,000, 1,60,000 we should transfer to allotment. In share application account, debit side we are writing, means share application account should be debited, and 1,60,000 we are transferring to share allotment, no? So to share allotment account should be credited with 1,60,000. In 2,40,000 balance, 1,60,000 is adjusted for allotment. Then the remaining credit balance in share application account is 80,000. No? That 80,000 we are transferring to calls in advance account. So that 80,000 also we have to credit to calls in advance account. Total 2,40,000. So observe this entry clearly. Here with the 2,40,000 in first entry we have created share application account. Now by debiting share application account with 2,40,000, this creditor account we have cancelled. In fourth entry, share allotment account is debited with 8 lakh rupees. In this, first category applicant share allotment money is there. Second category applicants share allotment money is there. Second category applicant share allotment money is how much? 1,60,000. So that amount we are cancelling because we are adjusting that amount from excess application money. Now they are not debtors for this allotment money. That is why their account is created. Calls and advance account is created because from applicants we received this money in advance. So applicants are creditors to the company. Creditor is a liability. Liability shows a credit balance. That is why calls and advance account is created. Actually here we should write applicants' names. Instead of their names we are writing this word now. Therefore calls in advance account also a personal account. Fifth entry, share application account debtor to share allotment account to calls in advance account. Narration, on 4,000 shares at the rate of 40 rupees each, share allotment money 1,60,000 should come. That amount we are adjusting from share application account. So in 2,40,000, if 1,60,000 is adjusted, remaining amount 80,000 we are transferring to calls in advance account. Mention that as a narration. Being allotment money on 4,000 shares at 40 rupees share is adjusted from share application account, and the remaining debit balance in share application account 80,000 is transferred to calls in advance account. Next entry, first category applicants on their 16,000 shares at the rate of 40 rupees each, they paid allotment money. No? For that we should write the entry. So they are paying money to us. Means bank is a receiver. Bank account should be debited. How much money is coming from them? 16,000 shares at the rate of 40 rupees each, 6,40,000 rupees. 2. In fourth entry, share allotment account is debited with 8 lakh. So we are writing that these two category applicants are debtors to us. Second category applicants, in fifth entry we have cancelled. Now first category applicants, now we have to cancel. By debiting we have created a debtor account. If you want to cancel, you have to credit. Therefore, credit share allotment account with 6,40,000 rupees. Sixth entry, bank account debtor to share allotment account, 6,40,000 rupees. Narration, first category applicants on 16,000 shares at the rate of 40 rupees each, they are paying allotment money. No? Mention that as a narration. Being allotment money on 16,000 shares at 40 rupees per share received. So share allotment related entries are completed. Now come to share first call related entries. First transfer entry, then received entry. First call amount we have to transfer to share capital. Share capital is a liability. Liability shows a credit balance. No? Therefore, credit share capital account. Applicants have to pay first call money to us. Means applicants are debtors. No? Debtor is an asset. Asset shows a debit balance. Therefore, applicants' names we have to debit. Instead of writing their name, we open share first call account. Instead of writing applicants' names, we are writing this word. No? Therefore, share first call account is also a personal account. Amount on 20,000 shares at the rate of 30 rupees each, first call money should come. 20,000 into 30 rupees each, 6 lakh rupees. Seventh entry, share first call account debtor to share capital account, 6 lakh rupees. Narration, on 20,000 shares at the rate of 30 rupees each, first call money we are transferring to share capital. No? Mention that as a narration. Being share first call money on 20,000 shares at 30 rupees per share is transferred to share capital account. Eighth entry is for receiving first call money. Allotment money related entries if you observe. For first category applicants, one entry we wrote. For second category applicants, another entry we wrote. Because second category applicants, not only adjusting application money, the remaining balance in application account, 80,000, we are transfer into calls in advance. That also we are showing here. That is why instead of combining those two, for first category applicant separate entry, for second category applicant separate entry we wrote. But in case of first call, there is no confusion like that. Because already the balance in share application account 80,000, we are transferred to calls in advance account. Therefore, for these two category applicants, only one entry we can write. In question is giving that from applicants we received 5 lakh rupees for first call. Our assumption is they are depositing money in bank account. So bank is a receiver. Therefore, debit bank account with 5 lakh rupees. Bank account debtor 5 lakh. Actually, how much money should come? 6 lakh should come. Only 5 lakh rupee came. More 1 lakh should come. That 1 lakh we can adjust from calls in advance account balance. In calls in advance account, 80,000 credit balance is there, no? That 80,000 we can utilize to adjust this first call money. Therefore, calls in advance account should be debited with 80,000 rupees. 2. In seventh entry, we wrote that they are debtors to us. Now, we are adjusting that amount. They are not debtors. Therefore, this debtor account we should cancel. By debiting, we have created this account. If you want to cancel, you have to credit. To share first call account. Amount total 5,80,000 rupees. Here, why we are debiting calls in advance account? In fifth entry, we have created calls in advance account with 80,000. So there is a credit balance in calls in advance account 80,000. Now that 80,000 we are adjusting here, no? After that adjustment, calls in advance account will get closed. By crediting, we have created this account. If you want to close that account, we have to debit. Eighth entry, bank account debtor, calls in advance account debtor to share first call account. Narration, see, from applicants for first call, 5 lakh rupees came. Actually, 6 lakh should come now. 5 lakh rupees is coming. In calls in advance account, 80,000 balance is there. That amount also we are adjusting for first call. For that we are writing this entry now, mention that in the narration. Being share first call money 5 lakh rupees received and 80,000 is adjusted from calls in advance account. In previous problems, we used to write entries for application, allotment, first call, final call. But in present problem, for final call, we should not write any entries. Because in current year, company is not making this final call now. Now the next entry, last entry is for interest. Here, allotment is made on 1st April. First call amount date, 1st July. So actually this 80,000 which we are adjusting for first call, that amount should come on 1st July. No? But company received this amount on 1st April. So April, May, June. 1st July means July we should not consider. So 3 months in advance company received this 80,000. Company paid interest on that amount to shareholders. Now for that interest we have to write the entry. How much is that interest amount? 80,000 rupees into interest rate is 6% now given in the question. 6 by 100 into 3 months interest we want to pay. Therefore 3 months divided by, in 1 year total 12 months. Therefore 12. 200 into 6, 1200 rupees is the interest. And company paid this money. So from company, cash is going. Means bank account we should credit, no? As per personal account rule, credit the giver is applicable. Bank is a giver here. Therefore, credit bank account with 1200 rupees. To the company, this interest is an expenditure because company is paying to shareholders. Expenditure is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is an expenditure, now we should debit. Therefore, debit interest on calls in advance account. Amount 1200 rupees. Ninth entry, last entry. Interest on calls in advance account debtor to bank account. 1200 rupees. Narration. On calls in advance amount, company paid interest now. For that we are writing this entry. Mention that as a narration. Being interest on calls in advance amount 80,000 for 3 months at the rate of 6% is paid. 3 months are from 1st April 2005 to 1st July 2005. Take a screenshot of journal. Journal is completed. Next, let us see how to prepare balance sheet. This is balance sheet. Balance sheet of Ever Shining Company Limited as at 31st December 2005. In question he is giving date now. On this date we have to show the balance sheet. Liabilities amount, assets amount. Liability side, under share capital heading, different categories of capitals we have to show. First one, authorized capital. In question, authorized capital is not given, therefore nil. Next, issued capital. Company issued 20,000 shares at the rate of 100 rupees each. So issued capital is 20 lakh. Next, subscribed capital. Same now, 20,000 shares at the rate of 100 rupees each, 20 lakh. Next, called up and paid up capital. First, called up capital. 20,000 shares into, in current year, out of 100, 80 rupees only company called. Final call in next year company is going to make no 20 rupees. Therefore 100 minus 20, 80 we should write here. So 20,000 shares at the rate of 80 rupees each. Called up capital is 16 lakh rupees. To calculate paid up capital, calls in arrears we have to subtract from called up capital. Calls in arrears on first call. On first call, how much money should come? 20,000 shares at the rate of 30 rupees each, 6 lakh rupee. In question is giving that from applicants company received 5 lakh rupee. If you subtract that, remaining amount is 1 lakh. 1 lakh should come from applicants. With company in calls in advance account 80,000 credit balance is there, no? That amount company is adjusting for this first call. So if that amount is adjusted, then the remaining amount 20,000 company cannot adjust. This 20,000 is not coming from applicants. Therefore, in first call money, there is calls in arrear of 20,000. So 16 lakh minus 20,000. In outer column, paid up capital is how much? 15 lakh 80,000. Next, in present problem, in share premium account, there is a credit balance of 2 lakh rupees now. In fourth entry, you can see that share premium account is created with 2 lakh. In share premium, there is a credit balance of 2 lakh rupees. This amount appears in balance sheet. Under reserve and surplus, that credit balance amount we have to show. So liability side total is 17 lakh 80,000. Asset side, in previous problems for 17 lakh 80,000, asset side we used to write cash at bank. But in this problem, cash at bank amount is not 17 lakh 80,000. To know the actual balance carried down in bank account, let us prepare cash at bank account roughly. Cash at bank account. Let us post these entries in cash at bank account. First entry bank account is debited now. 8 lakh rupees on debit side we should post. Second entry bank account is created. 1,60,000 we should credit. Third entry bank is not there. We need not to post that. Ignore it. Fourth entry ignore. Fifth entry ignore. Sixth entry bank is debited. 6,40,000 debit side. Seventh entry bank is not there. Eighth entry bank is debited. 5 lakh rupee on debit side. Ninth entry bank is created with 1,200. 1,200 on credit. Finally, the balance carried down in bank account is debit total 19 lakh 40,000 minus credit total 1 lakh 61,200 is equal 17 lakh 78,800. But in balance sheet, liability side total is 17 lakh 80,000 rupees. No? So the difference 17 lakh 80,000 minus 17 lakh 78,800 is equal 1,200 rupees. That 1,200 is nothing but interest on calls in advance. If company has to pay this interest, then this 1,200 in balance sheet under liability side we have to show. But here is giving that company paid this amount. This is an expenditure now. Expenditure means actually in P&L account debit side we should show. But here in this problem, why we are showing on asset side? Because without showing this 1,200, balance sheet will not tally. Then the meaning is company wants to capitalize this amount, just like heavy advertisement. So discount on issue of shares, etc. This expenditure also company wants to capitalize. And every year, some amount of this capitalized amount company wants to write off by debiting in P&L account. Till the complete amount is written off, this amount appears as an asset. Thus, under asset side, we have to show cash at bank at 17 lakh 78,800 and interest on calls in advance 1,200. Total 17 lakh 80,000. Two side totals are same. Balance sheet is tallied. Take a screenshot of balance sheet. This is the end of present video. Hope this video is helpful to you. Thank you.